How you doing, buddy?
Good, great. Thanks for having me.
So, hey, you worked for a direct lender for how long?
About better part of 7 years.
7 years of direct lender.
Yep, right before I came here.
Cool.
Yep.
What are some of the major differences between the direct lending platform that you worked on and becoming a broker that you noticed right away?
Well, the main reason is pricing. I mean, pricing and product offering, and the access to niche products.
Yeah.
Having substantially better pricing gave me more opportunity to sell.
Yeah. So I'd say if coming from the platform that you came from, how much better was the pricing when you first got to the broker world on, say, an FHA loan and a VA loan? Typically
about 0.25% to 0.3%.
Got it.
And we could also, make more money as a loan officer.
Yeah, so 0.25% to 0.375% better in pricing, and then also you're making more money for your commissions on each and every loan.
Better pricing for the client, higher commission for myself.
Yep.
So it was a win-win for both.
One of the downfalls that direct lenders think is they think the technology isn't there and you don't have as much control over a file. Can you speak to your experience coming from the direct lending side to the broker side on the technology that you have available to you?
Not true at all, and that was one of my biggest concerns. I really enjoyed the fact that I worked in an office with a senior underwriter, multiple underwriters that I could go talk to, and that was a huge benefit. And that was a big reason for me hesitating making the switch. However, within the first couple weeks, I realized that wasn't a problem at all. I could get on the phone and we had access to literally hundreds of underwriters or our AEs that were extremely knowledgeable. So that challenge that I thought that I had was not a challenge at all.
Another big bit of misinformation out there is that you can't close loans quickly in the broker world. Like you'll hear direct lenders say, hey, we can close loans in 15 days, 10 days, 12 days, etc. What's your experience with being able to close loans quickly in the broker world?
Another big misconception that I had, and another reason for me dragging my feet to make the change. I thought that losing the control of underwriting the file in-house was going to be problematic for quick approvals and quick closes and quick appraisal turn times and everything that we need to hit a 15-day or a 21-day close of escrow. And that certainly was not the case. And I learned, again, within a very short period of time, within the first couple weeks, couple months, that we could easily hit quick closes as long as we set the file up properly, with proper pre-approval. Now we're at hundreds of closed transactions now over the last 6.5 years, and it's proven to be just fine.
Talking about support and finding answers in the direct lending world, they say, hey, I can go straight to this person. I can have an answer back within, 15 minutes, 20 minutes. I think that's probably something that's beneficial on the direct lending side. But if you have a question about a loan program, if you have a question about anything loan related, what's your average turn time, would you think, in getting a response back?
This has changed for me throughout the years. Now, being with the team for 6.5 years, I don't need the accessibility like I did in the beginning. But in the beginning, when I did need that accessibility, our AEs were very responsive. I mean, they would pick up my call or call me back within 30 minutes. They were very responsive via text and email. If they weren't available for whatever reason, I could go to their team lead, or their one of many underwriters to get those questions answered. So I wasn't failing to get questions answered in a reasonable amount of time. It would take, if I had a pressing question, worst case scenario, I'm getting an answer in 45 minutes. And that's not bad at all.
Totally. And then how about pricing wise? When you're in the direct lending world, and I always hear this from my friends in the direct lending world, and in my short stint there, is I'd see the market improved, but your rates stayed the same, right? Did you have experiences in the direct lending world where your pricing wasn't getting better even though you're seeing the mortgage interest rate market actually improve?
There is a lag time. There's definitely a lag time. And that's going to be company to company. The smaller, nimbler companies might be able to react quicker to market movements. The bigger companies might drag their feet and wait to make sure that market movements is not going to impact them negatively one way or the other. So I would see a little bit of a lag time. And in the broker world, we see that if there's a pricing improvement, we see it immediately. Throughout all lenders. 100%. Reprice, and it's back up in 30 minutes.
I've always heard on the direct lending side that margin compression was a big deal. You get when things start tightening, because they have so much overhead from, district managers, regional managers, VPs, managers that have managers, et cetera. Not only that, but 401ks that they have to fund, health insurance they have to fund, all these different expenses that you're going to have with direct lender. You don't have that in the broker world. Would your experience be, when the margin compression comes from maybe a direct lending side, we're not seeing that at all on a broker side?
We would see that. We would see it on the government, high balance VA and FHA on the direct lender side.
Yeah.
And it would take some time to get that remedied.
Yeah.
And that would be problematic if you were trying to fund or trying to close a high balance VA or FHA loan.
Yeah.
And through the broker channel, we don't run into those problems.
Yeah.
We just don't.
Yeah, 100%.
And if for whatever reason one of our lenders had an issue, and I haven't noticed that they have, we have 88 other investors to choose from.
Yep.
So
100%.
makes it really easy to avoid that problem.
Well, absolutely. And I think one thing that I've always realized that on the direct lending side, you'll see where, let's say Wells Fargo Bank, by the way, like there's sometimes where they could be great and really tough to beat. And there's other times where we're smashing them and it's not even close, right? And one thing I see on our pricing is that you'll see the top 5 lenders in the mortgage broker world where they're the top 5 for that week. And then the next week, maybe their coffers are full and they've transitioned out of the top 5 and they might be down near the bottom 20. And you realize that in the direct lending side, you might have great rates for a while. All of a sudden coffers are full. You have more business than operations can handle. So they raise the interest rates so that they got a slow business coming in, right? And I think that's something on the direct lending side that you never see, because if one lender has got their coffers full and they've raised the rates, then you just go to the next lender. And that cycle is always continuing. And it's so incredible to see on our pricing engines how it changes all the time.
Mm-hmm. All day, every day.
Yeah, totally.
Yeah, so we don't run into that problem. We don't have that problem. I mean, we use Loan Sifter, and we plug in our client scenario, and we know in seconds who's the best, who's offering the best product and pricing. And it takes us just a matter of minutes to offer the best of the best that's out there.
Yeah. Give me a couple downfalls on the mortgage broker side that you've experienced.
We have low overhead. So we don't have, a specific dedicated IT guy in the office. If I run into a small computer challenge, I have to handle it myself, which is not, I can call Geek Squad, or I can call the lender, or I can, call my GoDaddy, whoever hosts my email. So it's a little bit more like running your own business. So if you do run into maybe an IT challenge or some other challenges, you kind of have to step up to the plate and fix it yourself. There's not a department or a guy or a manager that can hold your hand and baby you through every single step, but the folks that are typically transitioning from the direct lender business model over to the broker are going to be a little bit more experienced, and they can handle that stuff. They can do it. They can figure it out.
I like to think of direct lending as the JV model and brokering as the varsity model, because you have to be able to do so much more on the broker side, or just how you said it, it's you're truly your own business. I mean, great next question. How's that experience going from a W-2 employee to a 1099 employee, or having your corporation being paid?
Oh, I love it. It's phenomenal. I mean, we have more. You're running your own business within a business, and having a 1099 or having an S corp set up, it's going to say it just saves you money if you have a good CPA.
Yeah. How was that when you're looking at your first couple of paychecks and you're not seeing that crazy percentage coming out for taxes?
You can keep all of your money. I mean, you have to budget properly, but that all that broker check, it goes into your bank account, direct deposit, and you're not paying the self-employed tax and all those other lovely taxes that you do on a W-2. Now you're going to pay your taxes, but you set it up properly. If you set up a 1099 with an S corp, you're gonna have some advantages.
100%.
It's huge and saves you a lot of money.
Pricing on non-QM products compared to what you remember seeing back then. Was non-QM even a thing back then?
It was.
Just coming on board though, huh?
I stayed away from, I steered away from non-QM and private money lending, mainly because I didn't fully understand it at the time. And I wasn't super comfortable charging borrower paid at the time.
Yeah.
That just wasn't in my wheelhouse.
Yeah.
And I didn't need to.
Yep.
I just had a different clientele where we went all lender paid, and it was mainly conventional FHA, VA, and jumbo.
Right.
I didn't need non-QM at the time, and I didn't need private money.
Yeah.
And that's evolved. And I thank God that I did that, because now, every quarter we're closing a handful of those, and it's supplementing my income.
Yeah, 100%.
Big time.
Yeah. Product breadth, like what you have access to now, reverse mortgages, a great HELOC product, which I know we're not trying to sell HELOCs, but it's a great HELOC product. VOE, 1099, bank statement loans from 3 months, 6 months, 9 months, 12 months, P&L loans, foreign national, ITIN, FHA, VA, conventional. Is there a product out there that you really wish we had, but we just don't?
No. Diversifying over the last 6.5 years, and it has really helped me grow my business and survive in the leaner times. Yeah. I mean, during COVID, when rates were low, we were flourishing, right? But when things changed and rates went up, the only reason why we were able to pay the bills and be relatively successful is because of the fact that we diversified.
Totally. I would say this. For a loan officer that's doing 1, 2, 3, 4 loans a month, I could never see a reason why they would be on a direct lending platform. They're giving up 50% of their pay stubs right away to taxes and FICA and all that different stuff, right? And then your pricing is going to be worse. And if you're limiting the amount of transactions that you're closing because of your interest rates being higher, great question. How many deals do you think you close now just because you have lower interest rates versus when you're a direct lender and you have higher interest rates?
Well, we typically don't lose deals over rates.
Right.
We just don't. We're usually the most competitive in the market space. Yeah. Occasionally, if I'm up against a jumbo player at Wells Fargo or B of A or Chase, and we may have that competition there that we could lose some from time to time, but the majority of our deals, we're ultra aggressive and competitive with the rate. We're not losing them.
Yeah.